This is Rod Kusanen, Spooman for Risk for April 1st, 2019. All times on the chart are Central Standard Time. When you woke up this morning to see the market had gapped up as much as it did, what did you think and where did you think it was going? Well, a quick look at the historical activity of the market would have given you a very clear target. Way back, really not that long ago, but on the 21st of March, the market moved up to a high of 2865.25. And as close as we were at the open to that level, it was pretty obvious that that's where this market was going to continue to move to. And as it did, and then eventually, as you can see in particular where the market volume drops off here, we see that the high of the day didn't really make it much past 73, because that's where your volume began to drop off again. And being that we didn't go any higher, and I don't think we've got a lot left on this move up, what we really need to do is come back down and test these areas of support around 28.33.75, maybe even to 28.26.25. But the big number, incidentally, is 28.36.50. That's the big number below where the market is now. So that's a good 30 plus points below the market at present. And we can, I think, certainly anticipate that the market will drop sometime during the week and also fill that gap up that we had here on Monday. What we're going to do now is to take a look at some of the automated long trades that we got this morning, and then we'll come back and examine them in the light of the premium. Now, the first set of long trades came in just shortly before 8:45 this morning, on into about 8:49. All of these trades were great trades. The next series of long trades happens right in here on the pullback at around 9:10, 9:12 this morning. Then we had another pullback, and we got an initial set of long trades as it came into the pulled back into the upper value area, and then when it pulled back into the point of control, we really got a better signal here, and that takes place right there at 10:45. We get another pullback in the afternoon right here, 14:11, and got another long signal for the final run up. Beautiful job today. Absolutely beautiful job. Automated long trades. Now, when we get these trades, however, what we recommend to our traders is that they make sure the premium is divergent. And we've set up a new workspace that's designed to help you to see that more clearly, particularly by way of using our new TSC indicator. Now I'm going to put this on a 5-minute chart just so that you get the right idea of how to read the divergence. This indicator is sitting on the premium. So looking at this from the standpoint of both long and short trades, when we had that initial move up, that big move up right after 9 o'clock, that kind of a move up, which was, what is that, going from 56 25 all the way up to 62, a 6-point move in 1 minute. The probability that that is going to get a retracement is pretty good. So as you look at the premium, you're obviously divergent because that bar is going to be hard to beat. And you do get the pullback as the market moves up and the premium becomes divergent. Okay. Now, you don't see really any major divergence in here on a 5-minute chart. We're not always going to see that on a 5-minute. We'll go to a 1 minute in just after we've covered the concept here. But as you see, this low, here's our price, 58.75. That gets tagged over here. So look at where the TSC indicator is here compared to where it is here. See how fast that moved up? That big divergence is right where we want to pull that long trade. Now, as we move up higher, look at the TSC indicator. It's dropping. We should be as high here on the TSC. Pardon me. Look at where the TSC is here. We should be higher here, but we're not. We're lower. So that indicates this is going to pull back to some extent. It does. As it pulls back and the market goes lower, again, you don't really see any divergence in here. We haven't really moved up that much. But as the market has moved down and the TSC did not move down, that constitutes a form of divergence in itself. We move up here, it pulls back a little bit. Now you see a much more pronounced divergence on the TSC at practically an equal low, and we move up. As we move higher, the TSC is moving lower. So something's going to happen as this market moves up to this point. It's going to pull back a little bit because this high on the TSC should actually be higher than it is here because the Spoos are higher, but they're not. So this pulls back a little bit as it moves down. Okay. Again, no real divergence on this 5-minute chart. We move up here, we move even lower here, and then we get more of a pullback as this continues to move up. So this is all showing that this is going to pull back. It does. And we finally get into the final move down here. And again, no obvious divergence here on a 5-minute chart. So that's why we need to look at a 1-minute chart to get a clearer picture. But that's the idea when you're working with this TSC indicator. The divergence on the TSC indicator is real clear. It may not always be as clear in other indicators, and that's why we like this, because the divergence is real obvious. So let's go back to a 1-minute chart now. And we're going to line up the long signals kind of working from the beginning of the day. So let's go back. So we wind up getting a series of long trades as this market tests these lows. So from the step to the right of this global bar, let's look at our 1-minute chart. So that's where we're at on this 1-minute chart, right in here, in these lows. And you see how The TSC indicator is all moving up. As those lows are tested, the premium is moving up. So there's really any number of potential opportunities, to pull a long trade. But once this thing moves up, okay, look at where the TSC is as we go higher on the ES. We're going lower here. So this comes back down. Now it doesn't come back down a lot. And so compared to where we are over here, we're still higher on the indicator. So getting long in here is good. Now we get this dip, however. All right. We get that dip, however, and that might have been just a little bit confusing. But the raw data on the ES, pardon me, the raw data on the premium 1 minute chart here. All right. We haven't really dropped that much on the raw data. And again, this is a 1 minute chart. And what we're really going to wind up using is a 5-second chart. And that's where we're going to see this even more clear. But there is divergence in here for the long trade. But it's when it moves up that we fail to see the TSC move up at all. Here we are on a 1 minute chart. It's gone nowhere. And then finally, even after it's dropped, it still hasn't gone anywhere. So this hasn't really helped us too much. But once we get into this little dip in here, all right, you've got a little bit of an idea that that price area will likely get tested. So we move up again. This doesn't move. It should, but it doesn't. It finally moves up here. And as the market has now moved down a little bit more, we see our divergence. We're a little higher here than we were here. Okay, and that takes us all the way back to that low in here. And that low, keep in mind, 59, and you're at 58 here. So you've got some divergence here at that price. Moves down a little bit more and then starts to move back up. All of that is pretty uneventful. But these trades in here that we talked about, those were confirmed. Let's now look at the next series of long trades, which doesn't happen until the pullback in here. Okay, so now we're going to compare this to this on the premium. All right, so we're coming down to this low, and you see already that the TSC indicator is moving up. So that's a confirmed long trade. When we come down to this low, all right, we're still higher than we were over here. Okay. We are lower by comparison to what we were at here, but we're higher than where we were at this low. So we still have some measure of divergence, and that's how you have to look at that. You're not going to necessarily compare it here to here. And furthermore, our indicators are all moving up, and we've got a nice divergence on the raw data. Next long trade takes place right in here. And you can see the low here and the premium moving up there. So that's confirmed as well. Let's now take this all the way to our 50 tick chart. We'll look at this last trade in the afternoon. Look at the TSC, right? Drops down into this low, right? This higher than this. ES lower low, premium higher low. The divergence is clear, and all of our other indicators are now sloping up at the same time. The trade is pulled. It's beautiful. Same is true here. And you see us stepping up from that low here, and then we're sloping up on virtually all of our other indicators. And at the time of that trade, that's exactly what's taking place. So yeah, that's, again, this is helping us to see more clearly. Our other indicators are all confirming this, and we've just added this only to help make the divergence more obvious. Okay, so that considers the activity for the day, and we are kind of anticipating this market will short. Whether it'll start tomorrow morning, we'll have to watch the premium to be sure, but we are expecting a pullback. With that thought in mind, we look forward to our next video, and in the meantime, good trading to all of you. I'm RSKsys Intl, Spoon for Risk.